Ron, it seems a lot of people are spending more but getting less. Does that make events like Prime Day, where maybe you can get a bit more important?
I think that's exactly right. I think especially as we go into back to school and maybe ahead to the holiday season, sales events like these tend to aggregate a lot of demand. And the big question will be whether it's pulled forward or not. But I would say as inflation continues to run as it is, to your comments earlier, demand for deals continues to be pretty high. If anything, it gets even more important going forward. And from an Amazon perspective, there's just a lot of goodness that comes out of Prime Day for them. Not only is it to improve efficiency fulfillment centers, ideally get more Prime members or get them to spend more, but most importantly, to your point, it's convenience and it's driving, looking for deals at a time when prices are rising.
So what is the main strategic goal for these e-commerce players at a time like this? I mean, yes, making the sale is nice, but at what cost? Are you trying to get more members? Are you more trying to retain the members that you have in an inflationary environment where you're not the first subscription that they cancel?
I think it's both, frankly. I mean, first and foremost, I mean, there's news out that Prime membership growth is slowing for a few third-party providers out there. Look, they already have, goodness, over 100, maybe even 150, 170 million Prime users out there. So you want to keep them on the platform, keep moving, et cetera, et cetera. But you also want to attract as many users as possible. That's where students and other Prime products come out. But I think the goal here strategically is basically to remind or to be top of mind to get that greater share of wallet. And you do that by offering more convenient services, full stop. So if it comes to your home within Prime 2-day, 1-day, same-day shipping, whatever that is, that's going to drive, call it continued or even maybe accelerating e-commerce growth here as we go back to as the economy broadly opens back up.
Yeah, Ron, that's the e-commerce story, but a lot of Wall Street is focused on Amazon's cloud business. If we see any signs of softness this quarter, which I think is becoming a greater possibility as we hear about more enterprises pulling back on spending, how is that going to hit the stock and the value proposition of Amazon?
No, I mean, AWS is a very big part of the overall story, right? It's two businesses between retail and AWS, and we all know that we're seeing continued growth, strong backlog at AWS, and also majority of profits come from that business, given the, call it 30-35% operating margins. And so if we see a deceleration, it all depends on the size and the amount of the deceleration. But I would tell you that, frankly, I don't think anyone would argue that the broader where things are going longer term, even short, medium, long term, is to the cloud. On-prem is something that's being disrupted by the cloud. I think that's going to continue. And we're at a point now, given the size and scale of AWS, we did about $62 billion in revenue last year, that it's not the startups, it's every company moving online and moving to the cloud. And I think that's going to drive just longer term continued strength, regardless of what happens here in the short term.
That secular longer-term shift that we're constantly talking about, but in the shorter term, and it's not just Amazon, but Microsoft and Alphabet, the biggest companies in the market. Are you expecting any signs of deceleration or softness in the upcoming quarter?
So our numbers, we're not looking for that much of a decel. Of course, we're modeling a decel from the 37% XFX growth in 1Q. So just continued sort of trend lines from our perspective. But I would tell you, too, just from when we look at where things are going, when we think about what happened, even during the pandemic, March, April, May, we saw a big acceleration to the cloud. I'd expect that to continue. Maybe, we have some short-term weakness or short-term softness, which I'm not necessarily seeing per se, but I hear your question. But then we get into valuation and you look to see where shares are trading here at close to trough multiples, and we can argue what profitability will be, but I think that gives some support. And I'm knocking on wood when I say that, only because we talked about where this stock and others in the tech sector have gone, and frankly, we internet and others have led the market down, and frankly, I think we're at a level where hopefully we can build upon that, but obviously we'll see.